Acid. Rain. Acid. Rain. Acid. Rain.
What's going on, everyone? Welcome to our very last This Week in Crypto of Q1 here, and the last day of March as well, March 31st, 2023. Lots to get into on a nice, good-looking crypto week. We have our founder, Maxim, here. How are you, Maxim?
Hi, Brian. Yes, thanks. All good, all good. Spring is coming, and the hope, or let's say the environment for bull market still here, if even it's well, we will get into it, and not so simple with this irregular inflow of optimism, and at the same time regular inflow of regulatory attack. So it's very it's mostly volatile time. Yeah, it's not a time for clarity. It can go like 10% easily both directions. And taking all the things into account, spring and volatility, I think we're doing well.
Yeah, optimistically, as the weather is warming up here, it looks like prices have been too. It's obviously been a good 2023 overall. And we see a lot of big standouts over the past week. Obviously, the big social volume spike has been with XRP, now up 24% in the past week, which is quite surprising. I guess it depends how you look at it. It's surprising how it's really broken out compared to the rest of the markets, with a few exceptions like Stellar and TMAC, Hedera, and Conflux, to name a few. But the thing with XRP is it seems as though the sentiment toward it has wildly shifted its price up and down pretty much for the last, almost year since the SEC lawsuit news started coming out. And the latest is that the SEC may not be coming down as hard on it as originally anticipated. So it seems to be making up for lost time. And Bitcoin is kind of just doing its job and staying afloat in the high 28s, low 29s right now, pushing closer and closer to that 30K mark very slowly but surely. And with that, it's allowing a lot of altcoins to blossom. Certainly not all. We see plenty that have actually dropped over the past week. But if you've been in, 2/3 to 3/4 of the altcoins and picked carefully with a little bit of data help from Santiment, you've probably done pretty well. We can see that social volume over the past week, it's been a little down. Bitcoin not quite talked about as much as it was last week. It makes sense. Last week, I think Bitcoin had like an 8 to 10% week. Ethereum pretty much break even. Tether not talked about as much. Social volume all around, it's fairly flat, not huge fluctuations from the week before. But there are some interesting anomalies that we've seen. Currently I'm seeing that Cardano and Chainlink and XRP, to name a few, some of the larger caps are showing some breakouts right now, at least breaking out away from the rest of the altcoin pack for 3 to 5% divergences, stuff like that. So you can jump into a few of the big stories here. I wanted to show a couple of the highlights. For example, we mentioned a couple days ago that Cardano is on a major accumulation run right now. Pretty much ever since October, you can see that addresses holding 10,000 or more ADA have collectively accumulated a total of 1.03 billion Cardano, which is a 3.3% increase. So if you have been following Cardano, which I know of our audience asks about frequently, this is an optimistic sign, and it kind of pointed to what we're seeing, I guess, the last couple of days with the mild rises that have been going on there. What else? Bitcoin in general. You can see that since December 2021, the amount, February 2022, that is, the amount of Bitcoin addresses has ballooned by 10,279 when accounting for addresses with 10 or more BTC in it. So that's a 7.1% increase also. And it kind of points to the fact that, people are not being shook by this huge drop that occurred between the all-time high back in November 2021 and now. It's just continuing to increase. And naturally, the amount of addresses are going to increase over time. They don't really go down too often. But, when there is a huge wave up like this, it's generally good for the price of Bitcoin in the long run. When it starts to flatten, you can be a little more concerned because of the amount of volatile price action that's going on. We also see, and we'll get into this more, the social dominance of Bitcoin has absolutely exploded. This past week, it's been the highest it's been in over a year. The percentage of discussions related to Bitcoin versus the top 100 assets in crypto, it's making up almost 1/3 of all discussions now. And that's a big deal. It really is indicative of people paying attention to, king crypto, if you will, the #1 asset. And when that happens, there's generally a greater chance of an organic rise in the crypto markets. People, when they are focused on, the Doge coins and the more meme coins, or coins that maybe don't have arguably as transparent value as, Bitcoin, Ethereum, those assets that are at the very top, that's when you have to be a little concerned, because it's generally a signal of greed, whereas a heavy social dominance related to Bitcoin is more of actually a signal of fear, because people are kind of looking at Bitcoin as a relative safe haven compared to the rest of the altcoin pack out there. So this is generally one of the more bullish signs I'm seeing, Maxim, and I'd like to get more of your opinion on that momentarily as well. Finally, as I mentioned, XRP, take a look at the amount of profit-taking transactions that we caught. This was about 3 days ago, so I think it's come down a little bit. But regardless, this was particularly notable because it was the highest ratio versus loss taking of profit ratio versus loss ratio since August 2021. So we're talking about 1.5 years since it was last this high. So clearly, people aren't believing that XRP is going to continue up. That could add to the probability of a continued rise. But generally, in the short term, if you see a huge spike like this, you have to be a little concerned, because tops generally happened around these areas. Now, with that said, we can jump over to Sandbase and look at what's going on live right now. Bitcoin and Ethereum are just coming off of a pretty big profit-taking week, which might explain why they've both kind of flattened out for now. They certainly haven't sunk, which is sometimes the fear when you see a big spike like these over here. But so far, they're kind of just coming back to earth right now. Bitcoin's almost neutral once again, whereas Ethereum's still a little high and seeing a lot more profit taking than loss taking at the moment. So on the short-term scale, a little more concern than there is optimism, according to this metric. And I also, while we're here, wanted to look at MVRV as well, because it's closely related. You can see here, it's kind of a mixed bag. We haven't seen this in a while where it's, I mean, it's still about 2/3 undervalued on the altcoin side and about 1/3 overvalued. You can see the big outlier, Injective Protocol, XRP, after its huge week it just had. These are both looking to be a little bit overbought at the moment. So be a little careful if you're in these orange and red assets here. But you can also see, you know, Binance Coin, it really has struggled to keep up and pump the way the rest of the altcoins have been. Serum, to name another one, Gitcoin. And then let's take a look at BTC and Ethereum here. Bitcoin is actually looking semi-overbought, which I guess makes sense because of the fact that over the past month, it's actually one of the better performers. You can remember in the early to mid part of March, when a lot of altcoins were falling, Bitcoin was holding on tight in that 25 to 28K range. So it didn't really have the same fall that the rest of the altcoins did, which allowed them to start showing these underbought signals. So Bitcoin, a little semi-underbought, and then Ethereum here, also overbought. So yeah, as far as the overall totality of the markets, it looks like the average trading returns of the two top assets are a little bit overflowing at the moment, and there may need to be a little more of a cool down period. It doesn't mean that prices are going to necessarily correct, but there's a strong likelihood that we could see a continued flattening out period that we've kind of seen with the two for the at least last week or so. All right, now back to Sandbase here. Some of the main metrics going on, and I would love your opinion on a few of these things. For example, Maxim, trading volume has actually sort of calmed down after the initial influx of major trade volume that was happening in the middle part of March. So I guess the question is, do you see this as kind of a bearish divergence when you see trading volume going down like that while, you know, price has kind of done this? Brother Max, you're muted if you're talking. Did we lose him? No, he's here. Well, let me know if you guys get Max back, Baresh. I'd love to hear his opinions on that, but I'll just continue for now. We can't hear you, Max. I see you texting, but I guess your mic went out. See if you could finagle those audio settings a little bit. It's okay. Just let me know. Oh, if my video is frozen on your end, hopefully it's not frozen on everyone else's end. But if it's just yours, maybe just give your PC a full restart. Balresh, can you hear me? Okay. All right. It's just on Maxim's end then. Thank you. Thank you. Okay. So while Maxim is figuring out those technical difficulties, let's look at what some other things that are happening on chain at the moment. Active addresses for Bitcoin, not really doing a whole lot. They seem to be fluctuating up and down. If we look at the 30-day trend, you can see it's basically just zigzagging. So the amount of unique addresses isn't really doing anything special at the moment. MVRV, as I mentioned on the MVRV model, you can see that the 30-day MVRV is at about plus 11% right now. We generally look at about plus 15% as that. Sure. At least they can hear me. Stopping the screen share and starting it again. What's up? Sorry for the technical difficulties, folks. Good. Okay. Switching. Awesome. Thanks for letting me know, guys. All right. So getting back to Bitcoin, as mentioned, MVRV.
Maybe you can hear me now as well.
We can. Welcome back, Brother Max.
Yeah. So I did not do anything. It was some frozen. It doesn't.
Sometimes Skype or the interwebs just don't like to behave.
I think we see the first impact of artificial intelligence. Well, no. We need to stop them. They're sharing too much.
They're taking over.
Yes.
But now that you're back, I'd love to get your thoughts on this first chart I was showing with the trading.
You need to show it again because nothing was on my screen.
Can you see it currently?
Now, yeah. Now I can see. Yeah.
Excellent. So what I was pointing out was trading volume being down, price being high over the past 3 weeks or so.
Open Ethereum. It's a very actually crucial point. Yeah. So it's a kind of similar picture, and you see how many times we tried to break a high. There are two scenarios. Right now. One a bit more likely, actually. From the past, we have this saying: there are no triple tops or bottoms in crypto. It's from past experience. Yeah, it not always has to work, but whenever some level is tested 3 times, usually it's broken. So we need to take into account and it worked like in 80% of cases. I remember one time it didn't work, but so we could consider it was many attempts, and the divergence which we're talking about, it if I assume we're breaking up, it could have played down. We had this correction from 23rd of March, 1 week, till the day before yesterday, after which we started to grow. So you could say the divergence played out, very shallow correction, so we could break up. It's possible, yeah. So divergence might have ended, and now breaking up, we will go above, if Ethereum 1.8, or let's say 1.85, to be more precise, to the area of 2, to 3, to 4, whatever. Yeah, it's a possibility. Or we just tease again, we go slightly above, and we do a real correction, going to, I don't know, 1.5, if it's about Ethereum, 1.4 even. Cards are open still, yeah. I wish we could get more clarity, and we will see in more other metrics. It's always mixed picture, yeah. Always mixed pictures. There are divergences, but there are also kind of lack of accumulation. They started to accumulate small plays and they stopped accumulated. Yeah, it's not the easiest time to make a call, but in such an environment, it's more we need to incline to volatility and not to one direction. Yeah, last week I did prefer to go down, but we did so little. So I still think it's possible to retrace even more, but we've seen several times to market just retrace a little bit and continue. And we might have finished this divergence and just go up. So we need to consider both options.
Yeah, we do. I think I agree. It's a really difficult time to figure out whether we're finally going to break that resistance level or come back down to earth to shake out a few more weak hands before we finally do.
Yeah. And one interesting thing today, this increased amount of AI tools, and there are interesting tools now. We can pass through videos from usual suspects, from usual shill accounts on YouTube, Crypto, to give an example, yeah. Mm-hmm. And or BitBoy, whatever you want. And it gives you a kind of summary, what they're talking about, how they feel about the market, and I think Gary did 15 videos, and he said around the half positive, but second half still reluctant to be euphoric. It means And typical on the top, you know, like from this shilling YouTube accounts, everyone is like super excited. So there is not excitement yet. And many of them saying, yeah, we should break up, but maybe better first to go down. So this alone piece of information, luckily we have AI. Wow, AI really helps, because who on earth could have watched 15 videos? I would die watching them.
True.
Now we can't. Yeah, Gary spent maybe half an hour just processing. So this alone, that they're not convinced and they're reluctant, we should consider it seriously, that we break up and see if they got super excited. Yeah. And we can do this exercise every day now. I mean, half an hour we can spend our time. It's okay, it's acceptable. And hopefully we will catch the extreme in this crowd mood, which is reflected by kind of video these accounts are published, because they always feed you with emotions you want to have. So I would say let's give it a chance. Let's give it a chance to experience a little bit breakup.
Agreed. Yeah, I think, I mean, it does seem like it's an inevitability that we get above that 30K and 2K threshold for Bitcoin and Ethereum respectively. It's just a question of whether it's like a quick visit and then it just plummets back down, or whether we have enough on-chain activity that's pointing toward more of a mid or long-term rise here. So when we scroll down and we look for more evidence, you know, funding rates here, for example, this is always an important one to take a look at. And right now, other than a few exceptions like Binance Coin, Hedera, IOS Token, and OMG Network, most are just flat. It doesn't look like there's any excessive longs, which is good. There are some excessive shorts, as I just mentioned. There's one excessive long, XRP. It looks like a lot of people are trying to ride that wave up, so be a little careful of that. It would mean that XRP in particular has a higher chance of falling back down. But overall, it does appear that there isn't a ton of greed going on when it comes to people putting their money where their mouth is. It's a lot of just waiting and seeing at the moment, and very flat. So that's good. And when we look at some other things, whale transactions, it doesn't look like there's any major profit taking going on. Bitcoin's 100K plus and 1 million plus transactions have stayed fairly neutral. I mean, you can argue there is a long-term rise. I mean, you look at you know, a little 7-day average here, and we did have that big rise, especially at the start. So this is where either there was a lot of accumulation or a lot of profit taking, but prices just kept going up anyways. So that's a good thing. And then if we go down to the 3 key tiers of supply held, these 3 here, I'll add price really quick. So what do we see? We see the 10 to 100 one here. This one is going up. The address is holding 10 to 100 BTC. They hold about 23% of the supply right now. And in the past 3 weeks or so, it looks like it went up a modest 0.06%. However, 100 to 1,000, this one's going down quite a bit. It's actually sunk massively in just the past 2 weeks or so, going from 20.35% down to 20.21%. So that 0.14% decline in the supply held by these key whales, that's a concern big time. And it doesn't support that prices can continue to go up. Same with the 1,000 to 10,000. I look at this as a pretty big downturn over the past 3 weeks or so. It got up to 23.8%. Now it's down to 23.53. So 2 of the big 3 tiers in terms of Bitcoin sharks and whales, they're going down. And those are the 2 larger ones. The smaller one, the sharks, those are the ones that are at least hanging on. But, you know, if we merge those together, boom, boom, and boom, get rid of this. Yeah, I mean, this is an overall decline. Let's look at the last, in the context of the last year, or even 2 years. Yeah, I mean, we have to still be concerned about the fact that there's not a lot of accumulation going on here at all. You know, it was all the way up. When you look at the combined holdings of 10 to 10,000 BTC addresses, they were at 72.54% back in January 2021, a little under 2 years ago. Now they're way down at 66.7%. So we're talking about an almost 6% drop in the supply held by these key Bitcoin addresses. And that's something that needs to change, in my opinion, Maxim. What do you think about the whales going on?
True. This is, as I said, mixed picture. This metric by itself doesn't look good. It looks bearish. Yeah, no doubts about it.
Yeah, and
they used to accumulate in the falling prices. Now they redistribute on the growing prices. I don't know what it means. It doesn't look positive here. True.
Right. Yeah, exactly. They kind of have a mind of their own right now, and they seem to redistribute in inopportune times where there's a lot of optimism, and or at least more than there has been in a while. It seems as though the sharks and whales are not quite convinced yet, perhaps due to the uncertain economy right now, with interest rates still rising.
Possible. It could be that they're expecting liquidity crunch to come regularly, and as the big players, where there is liquidity crunch, there is opportunities, and they might be just pulling out. For us, it's a big amount. For them, small chunk, just to grasp an opportunity. Mm-hmm. And it's the first time in the whole Bitcoin history that we have already a few times we had liquidity crunch. It had to be addressed by central banks. And we might be observing new behavior as well. It didn't happen before. Maybe it doesn't mean bearish. It means they're just pulling out. And it looks like they don't pulling out into stable coins, because if you look into total market cap for stable coins, it also keeps declining, almost the same level as the Bitcoin whales. So it looks like they're pulling out money and they're taking out into US dollars or whatever fiat currencies, as they see some other opportunities too. Yeah. It's not a dramatic decline, but it's constant decline. If you, I don't know, do you have constant total market cap of all stable coins?
I don't have a template handy. If anyone has one, feel free to send it over from the team.
I will I do. I will send it to you in a second.
Yeah, please do.
It's here. It shows a lot of metrics and share. So you just need to open the first window. I will share it in Discord.
On Discord, okay.
Yes.
Checking the Discord. Got it.
Yeah.
All right, let's see what we have here with the total market cap of stablecoins right now.
Yeah, this is the first chart. The red line. Yeah, a red line is total market cap. You can increase or you can take longer time. You will see the trend is undoubtful. You can take for 1 year. You'll see how it keeps going down.
Yeah, let's zoom out to the last year. This is a very interesting chart. Yeah, so a year ago it was at 161.5 billion. Now it's down to 126.28 billion. So yeah, even with the sharks and whales looking okay with the stable coins, it doesn't appear that the overall market cap is as healthy as it was a year ago. Curious to look at
because now you can get it's also with some delays, this metric. You can see it start declining a bit late.
Yeah.
And it will keep declining even into now growing tensions or concerns about all this fiat currencies war battle, which we now see emerging. Governments of some smaller countries refuse to use US dollar. And what we've seen here decline, it means they pull out the money and put US treasuries 3, 6, 12 months. Short-term guarantee reward 4.5%. And on a decline in the bear market, what else do you want? Yeah, this is what we see in this red line. It might still continue. We will not catch a bottom with this indicator, but the behavior is obvious. They still keep doing it. Yeah, it was one of the indicators. That's why I added it on the top chart for me. I keep watching it. Nothing has changed yet.
Yeah, I mean, as long as it continues to slide like this, we have to assume that it's not great for the future of crypto. I mean, if we see that Bitcoin's whales are rising, it can be okay, but that's not what's happening right now. So
but,
yeah, I agree.
But take it with a grain of salt. You see, I mean, this specific point of view, just from this chart which you open on this time scale, it's very interesting. Seeing a look at the green line when the Bitcoin price peaked. Yeah. So in November 21, I think it was. And market cap of stable coins, it keep increasing for quite some time. So now see what's happening now. Imagine that was the bottom, yeah? The price started increasing and market cap keep declining. It's a leggish, seems to be leggish indicator because it's a big money, it's a big players. They make decisions, not just random. Some of them making, but some of them preserving like long-term strategies. And they could have made decisions, months ago when they saw next wave of difficult regulatory in crypto, just to make sure they can take out money and they have it. But it will take some time to change this long-term strategy, if even the market sentiment already has shifted. But it has to be on your screen, yeah, I do believe. Once we see there's a change, okay, so that will be kind of confirmation for mid to long-term bull market. Now we don't have it yet. Yeah. That's true. Right. Truth has to be said. Yeah.
Yeah, I read this line up. So after the all-time high in November, I look at the stable coins continuing to rise as kind of the crowd staying optimistic and thinking that this kind of dip was the same as this dip and we would eventually have a rebound, right? And then on this plummet right here in April and May of 2022, that's when the crowd finally decided, you know what? I'm going to just get out of crypto completely. I'm giving up for now. And that's when the stable coins started to turn into fiat, because people keep their money in stable coins if they're just waiting for the right moment to buy back in. But once the market cap is declining, that's when they're saying, I don't even want to hold it in Tether or USD coin. I'm just going to get out completely. I mean, maybe, there are cases where they're putting it back in Bitcoin, but they weren't here. We knew that whales and sharks were declining, just like the stablecoin market cap. So I think this was the point in which they started going into fiat entirely. And up until recently, because there was so much negativity, we just saw a continued decline of both stablecoins and sharks and whales for Bitcoin. But finally, we saw sharks and whales actually moving up for a couple of months, and then in mid-February they started to go back down again. So I like this. I'm definitely going to save this stablecoin chart because I think it applies heavily to some of our analysis in terms of what the top holders of BTC and stablecoins are doing at any given time. All right, so what else can we look at here? So the ratio of on-chain transaction volume and profit to loss, we already mentioned, it's looking more neutral now, which is good. Whoops. Get back to the chart. Mean dollar invested age is something I wanted to take a quick peek at because it was starting to flatten out. And it's rising a little bit once again. But, this tapering off period, Maxim, I think this had a lot to do with some dormant addresses, at least assuming that we were at a local top around here. And that's why a lot of older addresses finally said, all right, I got it up to about 28K again. It was down to 16K. I'm going to take some profits. And normally if this continues, like if it starts to go down, that would be a very good sign that we're off to the races. But sadly, over the past week, it started to rise again. Not a huge rise or anything, but if you start to see it flatten out more, then we're in business. I just think I was hoping that I'd be able to report this past week, that it was continuing to flatten or even go down.
Yeah,
that would be a very
nice.
bullish sign. Yeah.
Yeah, I also would be happy to give a clear call and then claim, yeah, we did it. It's so conflicting signals.
Yeah.
This is indeed, it was last week looked very nice. High level of profit taken. I remember also realized network profit loss was spiking quite nicely, and this flattening, and say, oh, if next week it will go down, this is it. We can double down it, and now again, so it's growing. Okay. Yeah. And this influencers are also cautious. And okay, whatever. No, actually, influencers cautious is a good sign. It's the one which is conflicting. Okay, but yeah.
Yeah, I mean, we can largely attribute that flattening out period, in my opinion, to the major top transactions that were going on. Right here, I reported this yesterday. The 5 largest Bitcoin transactions of 2023 all happened this month, all in March. Yeah, there's only been 3 months, but still, you look at the 5 largest and they all happened this month. That means there's clearly some people who finally decided this is the breaking point. It's become polarizing once again, where there are people who think we're off to the moon once again, and there are people who think we're going to retrace right back to 20K or even 16K again. So when that's the case, I think it lends to the fact that dormant addresses are becoming very active at the moment, and they are paying attention to this 30K price as a significant pivot for whether we jump way up or we fall right back down. You guys are welcome to check out this insight when you get a chance. You can also see how the supply on exchanges was being impacted. This was right around the time that the mean dollar invested age was flattening out. And you can see that it was flattening out as supply on exchanges was going up. So with all the inflows happening, that likely meant that the dormant addresses that were causing that mean dollar invested age to flatten, it was because of coins moving to exchanges to sell. And that seems to be confirmed by the Bitcoin whale line going down right now. So it is coming back down to earth now, which is good. But I still think that this mean dollar invested age line flattening was kind of a little bit of fool's gold, and it wasn't as exciting as we were hoping it would be.
Yeah, but it's also, I mean, you really not so often get all metrics aligned. It happens sometimes. But if even not, you still can make a feeling or can have a feeling for a market here.
Yeah, 100%. We also had a community. This is actually the one that was posted by our own team, but I really liked it. It points out the volume divergence that I mentioned earlier on this call. You can clearly see volume going down, price going up. Social volume and dominance at its highest levels in over a year. And then this one is, I don't track dormant circulation too often, but I think it's really good. 2 big 5-year dormant circulation spikes. They have to be related to the mean dollar invested age line that we just talked about, but notable nonetheless, because the last one we saw was in January. Before that, you have to go back to November. So these big spikes don't happen too often. And it again shows just how much older addresses are starting to interact with the network once again. Also take a look at the wrapped BTC major spike where they borrowed right at the local bottom. So this was kind of a trigger point. And guess what? The last time we saw wrapped BTC borrowed at a significant degree, that was a local bottom too, back here in mid-November, just right after the FTX collapse happened. So I think that this is something we should be looking at more and more, Maxim. The big spikes in wrapped BTC on Aave V2, they can be very, very telling when we're about to go on a bit of a bull run. or at least a mini one.
True. If yeah. Actually, it's a good sign. Yeah.
Very much so. MVRV long-short difference. This one's kind of a combination of the long-term average traders and the short-term average traders. And we recently saw a cross here. We've had multiple theories over the last couple of years about whether this cross into positive territory is actually a good sign. We've seen many bull runs start when it crosses above, as this arrow points out back in 2019. And we even saw, a big run here when it crossed in early 2020. But overall, I think we'd actually rather see it way down here. I think that this works similar to like a long-term MVRV, where the lower you go, the better. And it's clearly highlighted in the bottom zone. So we've had 2 of these instances in the past, 8 years? And in both cases, they were clear bottoms. So the MVRV long-short difference going into positive range, not ideal. Sometimes they can confirm that we're on a bit of a rally, and it means that it's going to be going on a little bit longer. But we'd rather be going in at the very start of the rally rather than just getting a confirmation that we're in the middle of one. So that's a great insight. Lots of really good posts in the past week. I definitely recommend people check out insights.santiment.net because we had some good ones, not just from our team, but our community member like B Batar, who's a friend of the company, and he puts out great stuff on like the technical side, mentioning that the RSI was showing a bearish divergence just a couple of days ago, weak buying pressure, the simple moving average for support of BTC levels right now. There's a lot of good things, so definitely check those out. And in the meantime, I wanted to look at DAI for a minute. We discovered this a couple days ago, but there were a bunch of huge transactions going on. You can see this 200 million DAI, which is essentially $200 million, and there were 10 of them in total. You can see here they're actually marked as mint and burn in a couple of cases. So very likely related to the core team behind DAI. I actually reached out to the team directly. They haven't gotten back yet, but I'm hoping to hear something related to what these big transactions are about.
First of all, I think they have from time to time ideas to move it to treasury bills. Maybe it's one of them, or move it to Circle USDC for the purpose of moving to treasury bills. They had constant this kind of ideas, and it could be one of them.
Yeah, I think that's very likely, especially when you see, burn and mint labels popping up. Yeah. I don't think it's a random DAI whale. We'll just put it that way.
You just don't have 200 million as a random whale.
No, very, very uncommon to say the least. I also wanted to look at a few random metrics like by the dip. There isn't much going on here at the moment, which is good. Obviously, we're not in a dip situation right now, so you're not going to see much of that anyways. But also we can look at this one. This is going to show the ratio between positive commentary and negative commentary. All right, so over the last month, what do we see here? This is when we made the transition to a new Twitter API methodology, so we can kind of just cut off everything before there. I'll just say the 15th. So not much out of the ordinary. It does look like the social volume overall has actually gotten a little low, kind of similar to what we saw here, where people were getting a little bored back on March 20th. That seems to be the case now, which, Bitcoin and Ethereum are still climbing just very slowly. So I wouldn't be surprised if this picks up soon. But the difference between the optimistic and the skeptical comments is really what we should focus on. And they're actually pretty tight, which shows that there's a little bit of doubt, in my opinion. These are more likely related to tops going on when you see big spikes in the blue, while the red stays fairly low. But right now they're both pretty tight, and that means the low is pretty close to the sell calls are pretty close to the buy calls, and we'd actually be happier to see that than the opposite, because that means that with the doubt, there's a greater probability of a continued rise. So I wanted to point that out on the social trends page. In terms of the overall amount of discussion, if we just put in an asterisk right there, we should have it pop up. It's interesting. Sometimes it doesn't show the main social volume data, but you can still look at it by platform, and you can see the Telegram is way down. You can see that Reddit is pretty neutral. Twitter is pretty neutral. This is when we had that shift in Twitter's methodology. Yeah, Twitter is actually getting extremely low discussion right now. And then 4chan, kind of just normal. Remember that 4chan was just added, by the way, guys, last week. So definitely start to use it. Some may roll their eyes and think that 4chan isn't a good indicator. I disagree. I think especially for top signals, you start seeing 4chan be one of the first platforms to start getting extremely euphoric and make bullish calls, talking about moons and Lambos, things like that. Right up there with Telegram. I think 4chan is a good top signal when you start seeing social volume for it going nuts. But for now, we're not really seeing any worrisome top signals, and that's a good thing. All right, we're 45 minutes after. Maxim, are there any other subjects you want to jump into before we start taking a few questions?
No, as a matter of fact, I might have to leave the stream today a bit earlier, like around 10 minutes.
No problem.
So, and we generally covered, yeah, mostly what is of interest, not only for short-term calls, but to understanding market dynamics.
Mm-hmm.
As it's the main goal, we really don't want people to be dependent on us, rather build their own understanding, knowledge, and be successful by themselves. And for that purpose, for today, we actually went quite deep and far away, covering on stable coins and redistribution. Yeah, it's okay. I mean, we can go into details for specific coins if someone has requests.
Yeah. Yeah, please let us know what you guys have been seeing, whether it's a certain type of metric that's been on your mind or an asset that you'd just like to review. We're here to help. So, Mr. Balaresh, let us know if you see any good questions out there.
So far, we have a request for Cardano.
Aha. Very topical subject right now. Cardano has been doing quite well. Yeah. So it's up 6.5% today, which is good. Let's look at some of its on-chain metrics here. Go to the last 3 months. And if we look at the local bottom here on the 10th, this was 3 weeks ago to the day. Its price is up 32%, so it's on quite a good run. Its trading volume here, not doing anything special. It is moving up on this rise, at least over the past week, which is good. But you know, it's not in like a long-term uptrend to coincide with that 3-week rise that we've seen in price action. Transaction volume very flat. Moving down here to daily active addresses, we can see that. See, this is interesting. Let me take off circulation for a minute because circulation isn't really telling us anything special, but daily active addresses is. Yeah, Maxim, take a look at how the DAA kind of doing that, but we have price doing this. So even, I mean, we can do it to the same time frame right here, and you can see that active addresses are actually moving down. Price is moving up. That's a concern. It means that the amount of utility is not quite justifying this price rise right now, at least according to daily active addresses.
Yes, if it stays like that till Tuesday or Wednesday next week, it's not going to end up well.
Yeah.
Yeah, but it might change. Yeah, I mean, Friday unlikely. It's just one day, unless now everything hell breaks up and Bitcoin, Ethereum pulls higher. Many things will come.
Agreed.
But then Monday and Tuesday, if still such a divergence on keep climbing price, that will be not good. Yeah, it means people just on one side not jump. We will.
Hey, Maxim, your audio is cutting out. You might have gotten connectivity issues once again. Anyways,
Yes.
well, yeah, you're still cutting out a bit. Maybe you can exit and come back. But while he's figuring that out, a few other Cardano things to look at. Take a look at the 30-day MVRV. As you would expect, it's gotten pretty high thanks to this 32% run over the past 3 weeks. The 30-day MVRV up to 11.6%. It's not quite in that danger zone, which is about right there. If we start to see it go above, that's a historically probabilistic time that prices are topping out. As long as it's above 0%, this red line, that means there's an increased risk in being in it. So the 30-day MVRV as of now, it's at the highest point it's been at since the last day of January, so exactly 2 months ago. Keep that in mind because exactly 2 months ago, we saw one final leg up and then this push downward. It got down about a negative 15% retrace. On the other end of the spectrum, the 365-day MVRV, the 1 year returns for average traders, it's still at about minus 11%. So there's still less risk on the long-term time frame, but a little more risk on the short term. Funding rates look neutral, nothing special there. Whale transactions, not really much. Now, I do find it interesting that, you know, I reported on this 2 months ago, and we suddenly had this huge influx of transactions that were $100,000 or more, or even $1 million or more, and they haven't calmed down at all. This was a big anomaly, and I can zoom out more and show you just how bizarre it is. So I don't know if there's some serious whale bot action or something going on. Founder addresses doing way more routine moves, but yeah, the whale transactions went from like an average of 300 to 400 to an average of what looks like 18 to 2100. So it's interesting because it hasn't done a ton to the price, at least initially. It was just continuing to go down along with the rest of the markets. But specifically the $100,000 or more ones, not so much the $1 million or more ones, they just absolutely took off. Amount of addresses, price for Cardano is 40 cents. So if we look at the 10,000 to 100,000, 100,000 to a million, million to 10 million, I think 10 million might, no, we can do 10 million too. So the amount of addresses is all over the place. The 1 million to 10 million one is going up, 10 million to 100 million is going down. Let's try to merge them all together. I think that's a better strategy here. Rid of that. Yeah, so it's still going up pretty consistently when you look at the 10K to 100 million. Let's zoom out a little. We'll put price on this to see what kind of alpha there is. So just a quick look. Yeah, it actually looks like this flattening out is interesting. I think overall you want to see the addresses going up like you did back here in April, all the way to basically the 1 year between April 2020 and 2021. that's when Cardano is really exploding. And the amount of addresses is doing a similar thing now, probably not quite at this level, but it is growing at a nice pace, and it's no longer flattening out the way it was when it went absolutely volatile to the max, hitting its all-time high in August 2021, then falling off a cliff. I think it was more just supported by the rest of the markets going up here. But when it's going up on its own, the amount of addresses, where it's now up to 177,000, that's a pretty good sign. Mean dollar invested age, not doing much for Cardano. It's continuing to age once again. You can see that the rally really did take off when the mean dollar invested age started dropping in November 2020. This was a year before the whole markets hit their all-time high, and it benefited massively up until that point. Network realized profit loss. It does look like there's been a ton of realized losses throughout the past year, really. And eventually that has to break and we'll start seeing some realized profits. So I like the look of this chart with so many realized losses happening over the past year and a half or so. And we can also see social volume and dominance is starting to pick up big time. Over the past 3 weeks or so, Cardano is really starting to get talked about a lot more than it had been in quite a while, which makes sense being on a 32% rise over the past 3 weeks, while a lot of other assets have either stayed flat or even gone down. So I think this is a sign that the mainstream is starting to catch up. It seems to be a pretty organic rise. You're not just seeing a sudden big spike like this. So I wouldn't be too worried about it. Just watch out if you start to see, one big singular spike like what happened here, because this was right when the local top happened about 9 days ago. And then after social dominance settled down a little bit, that's when prices resumed. And now it's more of an organic rise day by day. You just don't want to see that big outlier all of a sudden. Weighted sentiment, it makes sense with the social volume being as high as it is. There's a lot more positive sentiment toward Cardano than there has been in quite some time. Yeah, basically it got to a 1-year high these last few weeks. And even right now, it's pretty much at its most positive stretch. The only outlier week was way back in April of 2022. So yeah, weighted sentiment shows a little bit of a concern because of the amount of positivity. I think it has to do with social volume mostly, not so much just euphoric sentiment though. All right, so that's Cardano. By the way, Cardano, as most of you know, it is one of the most developed assets in terms of its notable GitHub activity. So that's always a positive sign for the number, is it 7th or 8th right now, market cap? 7th market cap asset. So thanks for the request on Cardano. Do we have any others, Balresh?
Not so far.
Okay, no problem. Well, we've done about an hour here. I think with Maxim dropping off a little early, us covering Bitcoin pretty extensively, this is a good stopping point. I want to remind everyone, please like and subscribe to our YouTube. It's extremely helpful for the algorithm and getting our content out there to the world. You also, of course, have your ref link if you want to make some money just for telling other people about Santiment. We share a very nice 25 to 35% of the signups from people you refer. So keep that in mind. And other than that, let's see how these markets end up. We could see 30K by the weekend or even today. It's very tough to say. I'm seeing a few more bearish signs than bullish at the moment. So take that with a grain of salt. Of course, it's not investment advice, as none of our videos ever are investment advice, but we do our best to point out the divergences that are popping up now and how things have happened when similar divergences have happened in the past. So with all that said, Have a safe, warm weekend. Get out, enjoy the world, and we'll see you next week, okay? Thank you as always, Balresh, and on behalf of Maxim, take care, everyone.